It's crazy, isn't it? Like, the way seniors are getting their health care is changing right in front of us.
It
It's like
is.
a quiet revolution.
Yeah.
Over half of everyone who could be on Medicare Advantage, like all the people eligible, they actually signed up in 2023.
Wow.
And the experts are saying that by the end of the decade, it could be 60%.
That's a huge shift.
It's a huge shift. I mean, that's a big chunk of our senior population moving towards this private managed care.
Yeah. It's definitely a trend to watch.
Totally. So today we're diving deep into Clover Health Investments Corp, ticker symbol CLOV.
Okay.
And they're smack dab in the middle of this Medicare Advantage boom, but they're doing things a little differently with this, like, tech-first approach.
Interesting.
Yeah, and, you sent over some really fascinating stuff about Clover Health, especially that in-depth value investing analysis.
Oh, right. Yeah.
So today, we're going to try to really figure out what makes them tick. What are their strengths? Where are the challenges? And what does it all mean for their future, in this ever-changing world of healthcare?
I'm ready to get into it.
Awesome. And stick with us, folks, because at the end, we're going to leave you with a question to ponder about whether this whole tech-driven healthcare thing can really last in this market.
Looking forward to it.
So, Chapter 1, Business Understanding,
Okay.
Clover Health. At its core, they're a Medicare Advantage insurer, next gen, as they like to say. But here's what caught my eye. They're all about offering these quote-unquote obvious healthcare plans, and it all revolves around this software platform they built called the Clover Assistant.
So they're really betting big on tech, huh?
Big time. They believe that by weaving technology into the fabric of their insurance, not just like tacking it on, they can actually control costs better and get better results for patients.
A vertically integrated model. That's an interesting approach.
Right. And you see it in how they make money. Obviously, there are the premiums from their Medicare Advantage plans, both PPO and HMO, plus what they get from the government.
Sure, that's standard.
But get this, they have these shared savings agreements with healthcare providers.
Okay.
So their tech is designed to find ways to save money, make things more efficient.
I see.
And then they share those savings with the doctors and hospitals.
So everyone's incentivized to keep costs down.
Exactly. Aligning incentives, right?
Smart.
They also get money through these direct contracting entities, or DCEs, which are basically government programs pushing for more coordinated, value-based care.
So they're working within those existing structures.
They are. They're also tapping into this thing called risk adjustment.
What's that?
Basically, they get more funding for taking care of sicker patients.
Makes sense.
Yeah, encourages them to cater to those who need more help.
Right.
And then there's pharmacy benefits management, which is a whole other beast, and even revenue from data analytics and insights.
They're covering a lot of bases.
For sure. But looking ahead, I think their real ace in the hole is this non-insurance segment, Counterpart Health.
Oh, yeah, I was curious about that.
It's a game changer. They're taking all the investment they've poured into the Clover Assistant, all their expertise, and offering it to other healthcare players.
So they're becoming like a tech provider, too.
Exactly. They're saying, hey, our tech is so good it can benefit the whole system.
That's ambitious.
Now, let's talk about the actual stuff they offer.
Sure.
First, you've got those Medicare Advantage plans, the PPOs and HMOs.
Right.
Like many others out there, they come with all those extras. Seniors love, dental, vision, hearing, even help with over-the-counter meds.
Gotta stay competitive.
Oh, absolutely. But the star of the show, really, is that Clover Assistant. It's this AI-powered platform that gobbles up tons of patient data and gives doctors personalized insights right when they need them.
Powerful stuff.
It is. They're trying to catch diseases early and manage chronic conditions better.
Proactive care, instead of just reacting when people get really sick.
Exactly. It's about bending that cost curve in the long run.
And that's a big difference.
Huge. They're also doing home-based primary care, which I think is so important for folks who can't easily get out and about.
Yeah, that's a great service.
Really shows they're thinking about everyone.
So where do they actually operate?
Right now, they're in Arizona, Georgia, New Jersey, Pennsylvania, South Carolina, Tennessee, and Texas.
Quite a spread.
And they've been focusing on these more rural or underserved areas.
Interesting strategy.
Right. Could be a smart move, less competition from the big guys.
Makes sense.
By early 2025, they had over 100,000 Medicare Advantage members. And get this, almost 95% were in their 4-star PPO plan.
4 stars, that's a pretty good rating.
It's a big deal. Shows they're doing something right.
Absolutely.
As of March 2025, their market cap was somewhere between $1.5 and $1.8 billion.
Okay, so they're not tiny?
Not at all. So what are they really offering seniors at the end of the day?
Well, they're promising high-quality healthcare that's affordable and, importantly, easy to understand.
Right, no one wants confusing healthcare plans.
And they're all about that proactive, preventive care, using the Clover Assistant to make smart recommendations.
And they have those concrete perks, right? Like
Yeah.
low premiums, manageable copays, affordable prescriptions, and limits on what you pay out of pocket.
That's peace of mind for seniors.
Absolutely. Plus, they have a wide network of providers, so you can often stick with your current doctor.
That's a big plus. People don't want to switch doctors.
No, they don't. So, to sum it up, Clover Health is a tech-driven Medicare Advantage insurer with a growing member base, a bunch of different ways to make money, and this core belief that their platform can make healthcare better and more affordable.
They're definitely trying to shake things up.
All right, Chapter 2, Management Evaluation.
Okay.
Leading the charge is Andrew Toy. He became CEO in 2023, and his background is mostly in tech.
Tech CEO for a healthcare company. Interesting.
Right. And then you have Vivek Garipalli, the co-founder, now the executive chairperson.
So he's still involved?
Very much so. And he has a ton of experience with the healthcare system itself.
They've got that balance then.
That's the idea. Now, there's been some executive turnover in the past, but their recent financial improvement could mean the current team is on the right track.
Well, the proof is in the pudding, as they say.
Exactly. And we have to talk about the elephant in the room. The scrutiny and investigations into their marketing and transparency.
Yeah, I read about that.
There were those shareholder lawsuits, which they've settled, and it led to better corporate governance.
So they've taken steps to address those concerns.
They have. And like everyone else in healthcare, they had to deal with COVID.
That was a wild time.
No kidding. As for how they talk to investors, they do have that investor relations website with updates and earnings calls, and they even have an official policy about transparency.
That's good, at least on paper.
Right. But, there were those accusations of not being so transparent before going public, especially about investigations in certain transactions.
So there's a bit of a trust issue.
There is. Investors got to keep a close eye on them.
Agreed.
And that brings us to their ethical reputation.
Yeah, those past allegations about misleading marketing and not being transparent enough, that definitely hurts.
It does. They do have a code of business conduct and ethics now, and a specific marketing policy.
Yep, that's a start.
And their financial improvement, plus their focus on those star ratings, could show they're changing for the better.
It takes time to rebuild trust.
It really does. So, Chapter 2 takeaway. The current leadership seems to know what they're doing, judging by recent performance.
Okay.
But their past makes it hard to fully trust them. Investors got to be cautious.
Due diligence is key.
All right, let's dive into the numbers. Chapter 3, Financial Health.
Time for some spreadsheets.
As of March 2025, their market cap was between $1.5 and $1.8 billion.
Right.
PE ratio, negative.
Not uncommon for a growing company.
Exactly. But revenue growth, that's where it gets interesting. In 2024, it was 9%, but for 2025, they're projecting a whopping 37%.
Whoa, that's impressive.
Right. And Medicare Advantage membership grew 27% year over year.
They're definitely gaining traction.
Their gross profit margin in 2024 was a solid 26.6%. And although their operating margin is still negative, it's getting better.
Good signs.
And their net loss shrank significantly in 2024, which is exactly what you want to see.
Moving in the right direction.
Their debt-to-equity ratio is super low, meaning they're not drowning in debt.
That's always good to hear.
And here's the big one. Their free cash flow, which used to be negative, is now positive.
That's a major milestone.
It is. Means they're actually generating more cash than they're using.
So they're becoming self-sustaining.
Exactly. Now, their price-to-book value is a bit high, between 4.43 and 6.5.
What does that tell us?
Could mean the market thinks they're going to grow like crazy and make bank.
High expectations.
High expectations indeed. So financially, they're on the right path. Margins are improving and their balance sheet is strong.
But consistent profitability is still the big question mark.
You got it. Now, we don't have a ton of long-term earnings data because they went public fairly recently.
Right, 2021.
Historically, they've had net losses, but 2024 was a big improvement.
Hope that trend continues.
Analysts think they'll keep losing money for a bit, but eventually turn profitable.
We'll see.
They haven't paid any dividends, and there's no talk of that changing anytime soon.
Makes sense. They're still in growth mode.
Right. They need to reinvest that cash. But their debt management is solid. Very low debt-to-equity ratio. And they seem to have enough cash on hand.
So they're not over-leveraged?
Nope. Their liquidity looks good, too. More short-term assets than liabilities.
Healthy signs.
The return on invested capital, or ROIC, is still negative, meaning they're not squeezing profit out of their investments yet,
Okay.
but it's improving. And analysts think their return on equity, or ROE, will get better too.
So efficiency is increasing.
And that positive, unlevered free cash flow trend shows they're getting better at generating cash from their core business.
Efficiency and growth, a good combo.
So, Chapter 3 wrap-up. Clover Health's financials are looking up, strong balance sheet, but proving they can consistently make money is still the key.
It's all about execution now.
We've covered a lot of ground already, folks.
We have.
We've looked at Clover Health's business, their management team, and their financials.
The fundamentals.
Exactly. When we come back, we'll dive into how the market feels about them, who owns the company, and do a full SWOT analysis to tie it all together.
Sounds good.
Stay with us.
We'll be right back.
All right, welcome back to our deep dive into Clover Health.
Part 2.
Part 2. We're kicking off with Chapter 4, Market Sentiment.
Let's see what the market thinks.
Well, the first thing to note is that Clover Health has been a bit of a roller coaster.
Volatile, huh?
Yeah, they've had this whole meme stock thing going on.
Oh, right. I remember that.
So their stock price has sometimes been driven by social media and hype more than actual performance.
That can be dangerous.
It can. But lately, they've been on an upswing. The past year has been good to them. And the buzz online has been pretty positive, probably because their financials are looking better.
People are getting more optimistic.
They are. But the analysts are still a bit mixed. Some say buy, others neutral.
Not a clear consensus.
Nope. And their price targets for the next year range from about $4.23 to $4.83.
Quite a spread.
Right. Shows there's still a lot of uncertainty about their future.
Makes sense.
Recent news has definitely helped them, though.
Oh, yeah.
Their earnings reports for Q4 and the full year of 2024 were strong, showing that adjusted EBITDA profitability and promising revenue for 2025.
That's good news.
It is. And the market liked their strategic partnerships and tech advancements, like Counterpart Health, teaming up with Google Cloud.
So they're making moves.
They are. But some insider selling has maybe taken the edge off a bit.
Ah, that can make people nervous.
Here's something really interesting. There's a lot of short interest in Clover Health stock.
Short interest.
Yeah, means a bunch of investors are betting the stock price will go down.
So they're bearish on Clover?
That's right. But high short interest can also lead to a short squeeze.
Where the price shoots up unexpectedly.
Exactly. It happens when those short sellers have to buy back shares to cover their losses.
And that buying frenzy pushes the price even higher.
Exactly. Looking at the options market, there seems to be a slight bullish sentiment overall.
So some optimism.
Some optimism, but also an expectation of more volatility, especially around earnings announcements.
Which isn't surprising given their history.
Not at all. So Chapter 4 shows us a stock with a wild past, a recent upward trend, and a mix of optimism and uncertainty.
It's a complex picture.
It is. People have strong feelings about Clover Health, both positive and negative.
They're a bit of a lightning rod.
All right, let's move on to Chapter 5, ownership structure.
Who owns the company?
Well, institutions own a decent chunk, about 16% to 20%, but it's not a controlling stake.
Okay.
Big names like Vanguard and Renaissance Technologies are in the mix, but their holdings have been shifting around lately. On the other hand, insiders own a lot, especially co-founder Vivek Garipalli.
So management has skin in the game.
Big time. That usually makes investors happy, shows their interests are aligned.
But what about that insider selling we talked about earlier?
Yeah, that's the thing. It's hard to know what to make of it.
Could be nothing, could be something.
Right. When you look at the top 25 shareholders, they hold a big chunk of the shares.
So ownership is pretty concentrated.
It is, and that can make the stock price jumpy, because those big players can move the market.
Makes sense.
Now, corporate governance,
How are they managing the company?
they've made improvements after those shareholder lawsuits. They have a code of business conduct and ethics now, plus corporate governance guidelines.
So they're trying to be more transparent.
They are. And their board of directors has both independent and non-independent members, which is good for oversight.
Checks and balances.
Exactly. So, Chapter 5 takeaway. Clover Health has a lot of insider ownership, a decent amount of institutional ownership, and a concentrated ownership structure.
And they're working on better corporate governance.
They are. All right, final stretch, Chapter 6, risk assessment.
Let's get into the SWOT analysis.
SWOT, strengths, weaknesses, opportunities, and threats.
A classic framework.
It is. So, starting with strengths,
Yeah.
their biggest asset is their proprietary tech platform, the Clover Assistant.
That's their secret sauce.
It is. Then there's their strong membership growth, those numbers are climbing.
People are signing up.
They are. And their financial performance is getting better, moving towards profitability.
That keep that momentum going.
Absolutely. Their 4-star rating for their PPO plan gives them credibility.
That's a big selling point.
For sure. Focusing on underserved markets could be a smart strategic move.
Less competition.
And their low debt gives them room to maneuver.
Flexibility is crucial.
So they have a lot going for them, but let's not forget the weaknesses.
Hit me with the bad news.
Well, they've been losing money for a while. That's a concern.
History matters.
It does. And those past regulatory issues could still haunt them.
Reputation takes time to rebuild.
Plus, they're super reliant on the Clover Assistant. If that tech falters, they're in trouble.
Putting all their eggs in one basket.
Kind of. And their ROIC is negative, meaning they're not making the most of their investments yet.
Efficiency is key.
And the Medicare Advantage market is crowded with big, powerful competitors.
It's a tough landscape.
No doubt. Now, the good news, the opportunities.
Let's hear it.
The Medicare Advantage market is growing like crazy.
Yeah.
More and more seniors are choosing these plans.
A rising tide lifts all boats.
Exactly. Clover Health could expand into new areas, grow their footprint.
More customers.
They can also make money by selling their tech through Counterpart Health.
Smart move. Diversify their revenue.
And that high short interest we talked about. It could lead to a short squeeze, sending their stock price soaring.
That'd be a nice bonus.
It would. And lastly, the demand for tech-driven healthcare solutions is only going to increase.
They're well positioned for that.
They are. But let's not forget the threats, the things that could trip them up.
What are the danger zones?
Well, competition is fierce, and it's only going to get tougher.
Survival of the fittest.
Right. Healthcare regulations are always changing. That's unpredictable.
A moving target.
If healthcare costs keep rising, they could be on the hook for more expenses.
That's a risk for any insurer.
And they might still face regulatory scrutiny, given their past.
They're under the microscope.
And if someone develops better tech, they could be left behind.
Gotta stay ahead of the curve.
So that SWOT analysis lays it all out, the good and the bad.
Gives us a holistic view.
It does. Okay, Chapter 7, conclusion time.
Bring it home.
Clover Health is a complicated story, folks.
It seems that way.
They've got this huge potential, riding the wave of Medicare Advantage growth and using tech to disrupt things.
But they have baggage.
They do. Their financials are improving, but they haven't fully proven themselves.
It's a wait-and-see situation.
Revenue is up, margins are getting better, free cash flow is positive, but those past losses and that intense competition can't be ignored.
It's a balancing act.
It is. So here's that question we promised you.
Okay.
Can a tech-focused company like Clover Health really make it in the Medicare Advantage world?
That's the million-dollar question.
It is. With all those regulations and those giant competitors, can they achieve long-term profitability and grab a real share of the market?
Something to think about.
It is. And that wraps up our deep dive into Clover Health.
Thanks for the analysis.
Anytime. If you enjoyed this and want more deep dives like this, make sure you subscribe to the Stock Analytics AI YouTube channel.
Lots of great content there.
You'll find links to all our sources in the description below. And just a heads up, this is for informational purposes only, not financial advice. Oh, and we used AI to help us analyze all that material.
Good to know.
You might see stock suggestions popping up in the comments, but those aren't from us.
Okay. Just folks sharing their thoughts.
Thanks for listening, everyone.
We appreciate you joining us.